Hello and welcome to another video on cross-border payments. And the reason to do this is, I, as a business owner of my own service company, when it comes to provide my service on the internet, I need to know about how can I manage payments, client payments. So because of that, I asked ChatGPT, the 3.5 turbo model, to create a roadmap or an efficient and effective roadmap that helped me to learn cross-border payments as a non-native English speaker, right? Or as a mid-advanced English user. So it actually created an output for that. Then I refined that output, and this is the end result. So I can summarize that ChatGPT, after all, create a 3-week plan, okay, that I can summarize that in 3 main areas. So the fundamentals, okay, knowing the basic building block about that. Then the processes or the mechanism of how all of these basic building blocks interact with each other, how they work. And lastly, trends and advancement in this particular knowledge or this particular field, right? So in the week 1, the foundations of cross-border payments. So he creates a plan day by day about what are the things that you should know, especially for the cross-border payments. About an introduction of the cross-border payments, then the types of the cross-border payments, regulatory frameworks that exist, the SWIFT and the corresponding banking, as well as foreign exchange and exchange rates. So then on the week 2, which is the knowing the process, the mechanism, okay, the cross-border payment processes. That is, the payment message type that can occur, Nostro and Vostro accounts. I don't know anything about it. Okay, that's one of the reason ChatGPT output this payment gateway and providers. So study various payment gateways and cross-border payment service providers, comparing their features and fees. Okay, cross-border payment challenge, and this is something that I'm going to talk about on the introduction. Okay, as well as the risk management in cross-border payments. And lastly, on the week 3 is the emerging trends and advancements in that industry. So like digital currency and blockchain, fintech innovation in cross-border payments API. A quick tangent here is that, for example, WISE is just a wrapper of something called the Community Federal Savings Bank. Okay, so this is a service that this is a New York bank. This is a New York bank that is the service like this, right? So continue. That is banking service, where now WISE use them, which is a wrapper of this. All right. It also is is FDIC compliant. And when I look at this, the FDIC, so it's the Federal Deposit Insurance Corporation. It's an independent agency created by the Congress to maintain stability and public confidence in the nation. The FDIC, okay, it was founded by the Congress of U.S. to maintain stability and public confidence in the nation's financial system. So interesting because the FDIC is an agency created by the Congress, the US Congress, okay, to maintain stability and public confidence in the national financial system. So once you create, or this is something interesting because every revolutionary, the day after the revolution uh, happened, becomes uh, a right wing, a conservator about that because now it is time to see how you can manage and defend this system. So the FDIC, the Federal Deposit Insurance Corporation, okay, is an independent agency created by Congress to maintain stability and public confidence in the national financial system. So the FDIC Insurance Deposit examines and supervises financial institutions for safety, soundness, and consumer protections, makes large and complex financial institutions resolvable, and manage receiverships. So the whole point of this, okay, is that it's not only protect consumers for any for something that can goes wrong. For example, market crash, something like in 2008 or in 1929. Okay, so they have this section for consumers, for bankers, and analysts. All right, and analysts. So this is something great and very very interesting in tangent. So now go back to the week 3, this emerging trends and advancement. So yeah, on the day 13, so cross-border payments API, case study, the real world examples like this, and then current trends and future outlook. So continuation of this program is from day 16 to 20, also practical applications. So now it is time to spend time on trying things out with the cross-border payments, and then review and reflect. Okay, so in the week 1, okay, just to recap about the week 1, about the main topic that ChatGPT mentioned that you should learn about it: the introduction to cross-border payments, the type of cross-border payment, the regulatory framework, SWIFT and corresponding banks. In this case, is identify is the type of networks that exist, okay, as well as foreign exchange and exchange rates. Okay, uh, so in just to make a quick recap of what I have learned so far, the introduction of these cross-border payments according to Wise and Stripe. So Stripe mentioned that cross-border payment is something very, very helpful and useful for a lot of companies, even though that you have risk to navigate. It can be a complex process due to the regulatory framework that you might encounter that, as well as the fees. Despite all of this challenge, a lot of business see an important trend and opportunity here because it opened up to new markets, new shoppers, grow their brands or their business, as well as earn cash flow. So, or diversify, it is the revenue stream, diversification. So three actions here, or three verbs here to highlight. So they expand to new markets, they reach new customers, and they diversify to it is revenue streams. So business diversify that. So with the right payment methods and the strategy, business very, very important here. This is something that is a lot of people might jump over this or skip this or not think about too much of that. Uh, you need to have a strategy and choose the right payment method with this, and I am a testimonial of that. So by choosing the right payment method and then the strategy, business can improve cash flow and accelerate growth, right? And by accelerate growth is that, well, with this huge amount of money that I have right now, or with this cash flow that I'm receiving here, well, where am I going to dedicate my time? Where am I going to invest that? In which business operation am I going to dedicate that? So, because I see myself as a business, uh, and if you see yourself also as a software business, well, you must know that you must receive constant updates to your software, much like what happened to your software applications in your mobile device or your desktop or your tablet, right? You must receive constant update because of the nature of things. So in there, then I look at the different type of cross-border payment, okay, such as wire transfers, credit card transactions, something that I quite familiar to this, and something that I new to this. So after a 33-year old with after three, so I was I start to begin to be a car holder in this year. So after 33 years, is that, oh, okay, I get it. Now I understand the power of credit. You know, something, and also it's very interesting. There is a very interesting video of Ray Dalio that describe from their experience, which is a hedge manager funds, allegedly one of the largest hedge fund in the world. The Ray Dalio here, so Ray Dalio here, Bridgewater, exactly. So Bridgewater Associates, right? So Bridgewater Associate here. All right. And so in that video, explain more about how the economic machine works. Okay, which is great, totally. So back to here about the type of cross-border payments. So wire transfers, credit card transactions, electronic fund transfer, international money orders, online payment platforms, and cryptocurrency. So according to Stripe, because all of this comes from Stripe, we have 6 types of cross-border payment. So this will be my source. Okay. So wire transfers, credit card transactions, electronic fund transfer, international money orders, interesting, international money orders, online payment platform, as well as cryptocurrency. So we have here is 6 points. 6 points. So the first is wire transfer. So understand this a little bit more. So I conduct a research about wire transfer, reusing some of the learning on how to become a business consulting freelancer, where after all, a consultant, the tasks that a consultant does are conduct a research, analyze the data, and then present the results in a visually engaging presentations. So people that don't hold any background on that can understand what it's all about. So what transfers? So this what transfers are the wire transfers are electronic transfer funds between different banks or financial institutions. Something that I'm going to talk about that in different part of the world. Okay, and they do that using various network service. Okay, that connect different geographic locations. Couple points to highlight here. Banks, financial institutions, uh, as well as uh, wire networks. So first, I just want to know about the banks and the financial institutions. So according to Investopedia, well, financial institutions are they solely exist to provide a wide variety of products to a wide variety of products and service to uh, business consumers or both of yeah they solely exist to provide a wide variety of products from lending, deposits, or investment vehicles to individuals or business or both, right? So the type of financial institution can be banks or credit unions. So this last one is somewhat not that common, and because of that, well, their fees are much more low. It have lower interest rates. Okay, when it comes to ask for a loan. So banks and credit unions, and we have investment banks such as Bank of America. So we can trace back that to its predecessor to 1799. Holy moly! Bank of America is something that I also do this to actually understand about the who the other players are in that industry. Okay, so the Bank of America, J.P. Morgan Chase. So Bank of America predecessor was founded in 1784. My bad, 1784. J.P. Morgan Chase in 1799. Citigroup in 1853. Credit Suisse in 1858. Deutsche Bank in 1870s. Goldman Sachs in 1896, okay, roughly a century later than Bank of America, okay, Goldman Sachs in 1896, and lastly Morgan Stanley in 1935. So the whole point of knowing about all of this investment bank is to understand how long all of these players are in this game. So Bank of America, J.P. Morgan Chase, Citigroup, uh, Bank of America, J.P. Morgan, J.P. Morgan Chase, Citigroup, Credit Suisse, Deutsche Bank, Goldman Sachs, as well as Morgan Stanley, okay, and then the brokerage firms that act as a middleman of a person of a business to buy and sell in their name, right? The brokerage firms like this. So brokerage firms. Uh, so let me look now the definition here of the brokerage firm according to Investopedia, right? So what is a brokerage firm? Okay, a brokerage firm or a brokerage company is a middleman who connects buyers and sellers to complete a transaction for stock, shares, bonds, options, and other financial instruments. So this definition is something very, very important to understand and to explain to others, right? So brokerage firms, after all, so they are, or they act as a middleman, or is a middleman, is a middleman, is a middleman who connect. All right, is a middleman who connects. Right, so it's a middleman who connects buyers and sellers to complete a transaction. To complete a transaction for stocks, bonds, options, something more recently, and other financial instruments. Okay, so now that I understand this, unlike investment banks, where these are institutions that invest in financial markets or invest in, there's something interesting I would like to know, right? What is the definition of this, right? Okay. Full service brokerage companies are compensated via a flat annual fees or fees per transaction. Mm-hmm. Interesting. So this is just to, this is the definition of this. Okay, the definition as well as this. The things to understand about this. So flat annual fees or is this. So fools are compensating. Yeah. So they are compensated. They are compensated. Exactly. They are compensated via a flat annual fee or fee per transaction. Online broker offer a set amount of free stocks trading but charge fee for other service. The lines are blurry, with full service broker launching phone apps and online discount brokers adding fee-based services. Important. Brokers may work for brokerage company or operate as independent agents. Very, very, very interesting. So with this definition about the brokerage firm, okay, as well as the investment banks, so where are investment bank accounted according to Investopedia, okay, like this. So an investment bank is a financial service company that act as an intermediary in large and complex, no, hold it, in large and complex financial transactions. An investment bank is usually involved when a startup company prepares for its launch of an initial public offering. And when a corporation merges with a competitor, it also has a role as a broker or financial advisor for large institution clients such as pension funds. Oh my God. So investment banks is a financial service company that acts as an intermediary in large and complex financial transactions. Interesting. So this is a middleman. So the word middleman may sound itchy, right? We don't say that, okay? But yeah, so investment banks are uh, act as a middleman. It's an intermediary. It's a financial service company that acts as an intermediary in large and complex financial transactions. So the key takeaway: investment banks specialize in managing complex financial transactions such as IPOs and merge for corporate clients. Modern investment banking is typically a division of bigger banks institutions such as Citibank or JP Morgan. Modern investment banking is typically a division of bigger banks. Modern investment banking. A Chinese wall is supposed to separate investment banking activities from the company's trading divisions to prevent conflict of interest. A Chinese wall. Interesting. So, again, learn the fundamentals. Learn the fundamentals. So, learn the fundamentals like this. Okay. So, what is an investment bank according to Investopedia? Okay, it's a financial service company that acts as an intermediary in large complex financial transactions. Okay, so the definition of investment banks, okay, a financial service company acting as an intermediary as a intermediary. So a financial service company acting as an intermediary between or acting as an intermediary acting as an intermediary in large and complex financial transactions. In large and complex financial transactions. Okay. For example, okay, so when a company goes public, so a investment bank is usually involved when a startup company prepares for its launch. Okay. Which is this. So, for example, an investment bank is involved when a startup initiate it is when a startup initiate it is first. For example, an investment bank is involved when a startup initiate it is first initial it is initial public offering, aka IPO, right? The IPO. Okay. Or when a company merge with another with a, okay, or when a company merge with its competition. Or merge with a competitor. With a competitor. Interesting. So with these two definitions about the investment banks and the brokerage firms here, and now I understand the subtle difference between them because, well, this type of financial institutions are part of the wire transfer, where this is an exchange of electronic fund, which is the exchange in, or this is the transfer of electronic funds across different banks or financial institutions in different part of the world through a system, okay, or through a financial system or through various wire networks that are in different geographical areas. So this can be seen much like as the way how the HTTP works, right? Where you have a bunch of cables that connect different computers around the world, and the way they communicate is using the HTTP or the protocol, right? The hypertext transfer protocol. Okay, so this is one way to exchange this data. So financial institutions use a particularly and their own system because first they want that transactions happens in a secure way. Okay, this is not for consumers. This is widely used is for financial institutions that need this type of security, as well as other security measures. So yeah, this can be seen as this analog here. In any case, wire transfers are electronic transfer funds between companies. Okay, so are electronic transfer funds between different banks or financial institutions that are in different part of the world, and they do that through a financial system, okay, or through a various wire networks that are through the various wire network that service different geographical areas. The whole point of this is to recognize this about wire transfer, one type of cross-border payments, and what are, after all, a financial institution, okay, which they solely exist to offer a wide variety of products and service, from lending, deposit, or investment products, okay, to different, um, to different, mm, mhm, to persons, or to individuals and business, or both, right? And well, what I do is just to understand uh, more about this financial institution. What are the type of financial institutions? So you have banks and credit unions, investment bank that they act as an intermediary between. Uh, they act as an intermediary in large and complex financial transactions. So, for example, they are involved when a startup goes public, okay, or when a startup initiate it is initial public offering, or when a company merge with a competitor. So that's where they are. Okay, so that's one. Uh, and the type of financial or the type of investment banks are, well, Bank of America, founded in 1784, JP Morgan, founded in 1799, Citi Group, founded in 1853, Credit Suisse 5 years later, Deutsche Bank in 1870s, Goldman Sachs at the late 20th, 18th centuries, and Morgan Stanley in 1935, 14 years after the Great Depression in 1929. So this is something interesting, very, very interesting to recap about this. Another type of investment banks or financial institutions are, well, the brokerage firms that act as a middleman between buyers and sellers to complete a transaction. So for stocks, bonds, options, or any financial instrument. but they act as a middleman for that. So they're compensated via flat annual fees or fee per transaction. You know, that's the way they generate the revenue, is a flat annual fee or per transactions. And knowing this business model allows you to replicate that to your own life, right? Especially when it comes to these flat annual fees or fee per transaction. So brokers may work for a brokerage company or operate as independent agents. Something very, very important. So type of brokerage firms we have is Merrill, which is a subsidiary from Bank of America, Merrill, Fidelity Investment, TD Ameritrade, Interactive Broker, Webull, and Robinhood. Okay. Also, I look at other type of financial institutions like mortgage lender. So JP Morgan is one of them. Flagstar Bank, Mr. Cooper, PNC Financial Service, Ally, and Guarantee Rate in 2000. So with that, right? With that overview about the financial institutions and what is a wire transfer, an electronic transfer funds between banks or financial institutions that are in different part of the world, and they do that through a financial system or through a wire networks across the world. Okay, so these financial institutions, after all, they solely exist to provide a wide variety of lending, deposit, and investment products to individuals and or companies, or both, right? So, type of financial institution can be investment banks, which act as an intermediary for large and complex transactions. So, for example, when a startup initiate its first or initiate its initial public offering, or when a company merge with its competitor or merge with a competitor. Okay, so these investment banks are involved in that transaction, in these complex or large transactions. The type of investment banks we have, well, uh, Bank of America, GP Morgan, so Bank of America, GP Morgan, Citigroup, uh, more, yeah, because I want to remember this. So Bank of America, so Bank of America, so Bank of America, Morgan Stanley, Citigroup, Credit Suisse, Deutsche Bank, as well as Goldman Sachs and Morgan Stanley. Okay, in brokerage firms, which is another type of financial institution, they act as an intermediary between the buyer and the seller to complete a transaction. So they, it can be stocks, bonds, options, or any other financial instrument. Okay, so they're compensated via flat annual rate or fees per transaction. And a brokerage can work for a brokerage company, you know, or as or operate as an independent agent, right? So Merrill is one of these brokerage firms. It's a subsidiary for Bank of America. So Merrill, TD Ameritrade, Fidelity Investment, Webull, Interactive Brokers, and Robinhood are good examples of brokerage firms. And then you have is mortgage lender, okay? Where now mortgage lender here, well, they allow you to access to loans, credits, let's say home loans or car loans, right? So JP Morgan, Flagstar Bank, Mr. Cooper, PNC Financial Service, Ally, and Guarantee Rate. So with that, okay, that'll be all for this video. Take care. Bye bye.